Okay, guys, welcome. Welcome to the Saturday live stream. Hopefully, you guys are having a good start to your weekend. And if you're new to this live stream, basically what we do is we go through stock market. We're just looking at charts. We're looking for trade ideas. I open this live stream up for my subscribers to go ahead and let me know a chart they want me to look at, and we'll pull it up. I try to get to, most of the charts, and we'll just do some technical analysis on your stock picks. Try to keep your picks to one, max two, so that I can try to get to everyone. I'd like to be able to just get to everyone that wants me to take a look at a chart. So let's keep our picks to one or two just so we can, keep it moving. And then drop me a thumbs up, guys, if you haven't done so. It helps the channel. I do appreciate that. We're going to get right into it. Let me know how my audio sounds. I just want to make sure we've got good audio. So, give me an audio check. And we'll get into it. There's about a 20-second delay on this thing, so just keep in mind that's kind of what's going on. So usually what I do is I just start at the top, and we'll just work our way down as people join in. We'll get into the charts. And I usually start off with just a broad market, kind of a broad market analysis. So we left Friday, pretty strong rally in tech especially, but it was relatively broad-based. Let's kind of do a recap of last week. So last week, I don't know if it was early last week or maybe the week before, but I talked about we were in the oil shorting, we were shorting the energy stocks, and then starting to look for rallies in tech. So I kind of started queuing people up that, all right, that's what I'm interested in. I'm seeing a potential rally in tech. I pointed out several charts there. Let everyone know that I was long in tech throughout the week, and Friday was it was a culmination of that trade because we got a pretty strong rally in tech and just across the board. So that's all working great. The longs are working great. And I think there's some more upside here. So let me point out exactly what I'm looking for, probably opening up the next week. We entered the gap. Well, not quite. We're basically on the gap here in triple Qs. Triple Qs is a tech sector. If you guys aren't familiar with what triple Qs is, it's basically the NASDAQ 100. So it's the top 100 stocks in the NASDAQ. However, it's pretty heavily weighted towards the FANG stocks. So Apple, Microsoft, all that crap. And so, that's basically what it is. But in general, where those FANGs go is where tech's going to go, in a broad-based manner. So the little tiny speculative tech names like the ARK Innovation Fund tech names, those can rally a lot more, and that's like Carvana and just those little names. So here's the gap entry right here on triple Qs. It's right there. We basically closed on it on Friday. If I zoom in, maybe we entered the gap. I think we closed right on it. So basically right where we're at, and then we've got gap fill at 299.30. So I don't know. I think we maybe gap up on Monday, gap up right to that level, and that's probably going to be resistance. So what I would look for is us to hit that level sometime next week, Monday, Tuesday, very likely. And we should get a pullback there. So the pullback would likely be to this trend line. This is an upward trend line I've been watching. So maybe we gap up and then sell down to the trend line, something like that. So I'd be looking for that to hold. It doesn't have to hold for the rally to continue. There is some levels to watch. Basically right here, about 285.22 is that there's another gap. So we could run down, fill that gap, and then bounce. That would make a lot of sense, okay, to do that. And then there is a gap way down here, down at 276.29. We could fill that gap. That's about as far as I'd want to let anything run to the downside before starting to maybe even look at shorts. So the way I will trade it, just to let you guys know, at least how I'm anticipating to trade it, is exit my longs right there on that gap fill. Probably flip short, Now, I do think this is a bear market rally, so I think there's probably some more upside, and I'll show you guys those targets. So what I'll do is I would flip short, but maybe not a full-size position. Catch some of that short trade to the downside of we reject on this gap fill, and then flip long, start to find areas to flip long. I'd be looking at this trend line as the first area, and then potentially this gap fill right there at about 285. So that's how I'm looking to trade it. Unless I see something change in the charts next week, that's the plan. And then we'll look to, if once we go long, if this works out, then I'm probably looking at a move all the way up there at 318. All right, that's a level I've been talking about for a while. I thought we were going to hit it right back here when we were rallying in this rally. We caught most of that rally, and I thought we were going to run up and hit it. We got close, but they sold it down. I think that's where they're going now. There, and then potentially all the way up here. We got another level up here at 329 and this downtrend line. Big zone of resistance right up here. So if we get to 318 and everything looks good, then maybe we flag out right here or get a pullback and then do that. All right, this would be this is as far as I'd be willing to let a long go. Unless there's something crazy that changes in the charts, I will be most likely repositioning into a full short position up here. All right, so there's the trading plan. That's how I'm looking to trade it. All right, now let's get into these charts, guys. We'll start here at the top. So PANW. And guys, as I go along, if you can just drop me a thumbs up, I do appreciate that. It does help the channel. We got right now, and roughly 100 people watching the live stream. So, all right, so triple Qs, and we're moving to PANW. This is Palo Alto. Now, I know that this was a short idea, and it looked like a decent short. It definitely looked like a bear flag. But the thing is, the reason why I exited this is because the broad market, the triple Qs, was set up for a, it was set up for a rally. And this is tech here. So this is not going to sell off if the broad market and the market leading FANG stocks, if they're rallying. So that's why I'm not really looking for tech shorts right now. Even as good as this one did look, it's not playing out. This bear flag, so you had a flag pull, you flagged out, and I was looking for a continuation. It's not playing out. This is not the pattern that you'd want to see. So you started to break impulsively, but there was no follow through, and they stepped in and they've been buying it. So the pattern's been void, and I wouldn't want to be short this right now. What this will probably do, if tech's going to continue to rally, is we could rally up for a back test of this trend line up there. Okay, that's the broken trend line. I'd be wanting to short it up there. All right, that's all I have in that one. And the other thing, you did have bullish divergence down here. It's just kind of validating. That low was a divergent low. We did get the rally. It could roll over and fail. It's just with the broad market. I just don't want to go against the tide or the flow of the river right now, which is a rally. That will stop that will stop abruptly. I just don't know if it's going to stop now. I think there's some more rally in tech. I think this is just getting started essentially. And I'm looking for kind of a multi-week, maybe a multi-month rally. It needs to take time away to where the point being is that bear markets follow the slope of hope. Well, you have to give the market hope. We can't just crash. If we just keep going down and crashing, all the sellers flush out and there's no more sellers. And if there's no more sellers, then that's the end of the bear market. So because bear markets typically take time, and I think this one is going to take some time, then we will work our way lower over time, which means we will have multi-week / month rallies in between. And I think that's what we're in the middle of right now. So as time wears off, people will start to get more bullish. They'll say, okay, I guess that's the end. the economy's not that bad. Things, inflation's coming down. There will be fundamental indicators telling us that, okay, things aren't as bad as we thought. There will be, we'll start to see the light at the end of the tunnel in this bear market, and then it'll roll over again. All right. And then the fundamental and the indicators and the headlines will get bad again. They'll follow the price action. All right, FDX, FedEx. Oh, that's a big breakout, or that's a big candle there above the 200-day, huh? Interesting. Okay, so bullish falling wedge. I did point that one out recently. I would say the buy signal came right there. That's a nice breakout candle for sure. Because look, there's resistance right there. Okay, lots of tags. Huge breakout candle. I don't know what was reported there, but we were all the way down here and boom, gapped up. But so that's your buy signal, and there's your bullish divergence right there. Okay, so it's a long, or at least it was. It's not my favorite, obviously, now that you've gotten away from that buy signal. And looks like this gap is where they brought it to. All right, so there's your resistance, the recent highs. There's probably some more upside here if we're gonna continue to rally. I'd look for that level as your next level of resistance, 265, we'll call it. And yeah, that's about it. That's all I see for right now. But you just hit that, and you're probably going to pull back down to the 200, maybe fill that gap. Something like that, and then fail. I don't know. Not my favorite. If you're long, then I'd watch these levels, and you've got the gap filled down here at the 200. I would want to buy it on that buy signal, because basically, even from the end of the day, it's up, 6% and a high of 8%. So, likely going to get a little pullback, but yeah. All right. ZG. All right. Hey, Acupuncture Herb, thanks for the super chat. Appreciate that. I'll get to yours next. ZG. Zillow Group. All right, so I talked about this area right down here as being a key area, an objective area to go long. No guarantees, of course. No guarantees on anything that I say. But that was an objective area to go long. We had bullish divergence on the momentum indicators, and we had a bullish falling wedge pattern, and we were at support right there. So I was like, look, low risk, or, low risk, high reward potential at this area here. Okay. And I know a couple people did take this long here. And then, from there, it's rallied 20%. Now we still haven't broken out of this bullish falling wedge, and we're getting close to the top of the wedge. What I would expect is we're likely going to probably gap up right there at the wedge or hit it. If you took the long down here, I think it makes sense to exit the long right there, because you just caught that move, and wait for the breakout. Wait for the impulsive buy signal on the larger pattern. Because if you don't get it, then maybe there's another leg down. All right, and then it'll break out. You already caught that trade, so I would exit the long, and then let it do its thing. Maybe it comes down, fills this little gap right here at about 34.60, and then breaks out. And I would just wait for the breakout. And then if you get that breakout, there's a key level of resistance, 44.85 and 54.50. And then the 200 is heading downward. So I suspect we get up to that 54.50 area pretty quickly on a buy signal. All right. Wrap. All right. This is a junk stock, or a junk stock, basically, penny stock. Anytime you're working with a penny stock, you want to taper down your position size. If your normal position size is 10 grand, whatever your position size is for kind of a normal position, On a penny stock, you want to taper that down, maybe $2,000 or something, you know, because these are a lot more volatile. Huge move. I don't think there's anything here. If you look on Friday, it just rallied all the way up, pretty much close to the 200. The seller stepped in early and they smashed it back down. That's like a day trade, and that's really probably all that there is. I wouldn't. Yeah, that's about all I think there is on this one. You fill the gap right there. No, actually, you didn't fill the gap, but regardless, that's all I see on that one. All right, moving on. Uber. Again, guys, just try to keep your picks to 1 or 2 max so that I can get to everybody. And, you know. All right, Uber here. So Uber has this downward price channel on the daily chart. We've broken below it. Got rejected, still below it. Divergent low for sure. See that? See the bullish divergence right there? All right, so you've got prices making lower lows, divergent low, divergent low, divergent low. So divergent or breakdowns, and that's what this is a break. There's a downward channel we broke down. Breakdowns that occur with bullish divergence have a high probability of failing or being recovered, I guess. So what I think we'll probably recover and head to the top of the channel. That's why I have that marked out. But we got to see it first. We haven't seen the recovery of that channel here. So I would probably want to just wait, I think, till you can recover this channel. That's probably how I would treat it. Maybe something like that. Give it the benefit of the doubt, but maybe if you can recover it, you get a big green candle on the recovery, and it's probably going to run to the top of the channel or the 200-day. Okay, so that would be my trade. Until then, I probably wouldn't. I probably wouldn't mess with it. But yeah, I think it's going to happen. All right, maybe something like this. Back test. Okay, and run. So that's that one. HCA. Is that a REIT? Healthcare REIT, maybe? It is. I just know a lot of these stocks by heart because I've traded them all for so long. All right, there's your bullish trend. All right, broke trend, big sell signal, bear market. So recognize that. So anytime I tell you there's a rally potential, just recognize bigger trend. We're in a bear market. So, the most I'd be looking for is bear market rallies. All right, which we don't ever want to trust a bear market rally. So we can trade them, but we definitely want to, you want to be quick on the trigger when it comes to exiting a position. And because a bear market's a lot like a bull market, except it's in reverse, so obviously heading lower and faster fast forward. Bull markets are like they rise the slope, or what do they call? They rise the wall of worry. They grind higher over time, kind of day in and day out. They're grinding higher, and then you get these little corrections in between. Bear markets follow the slope of hope, but they go faster. On this one, I don't see any bullish divergence. Obviously, we're rallying, but not with bullish divergence. So for me, it wouldn't be anything I'd be really interested in. Maybe you got this downward channel. I don't know. It's not anything I'd be interested in. I just don't see anything here, really. I think you're heading a little lower, probably down to here. Pre-COVID highs. I think that's where you're going. So maybe what it wants to do, rally up, hit this trend line. That is a trend line there. come down, hit the pre-COVID highs, put in bullish divergence, and then you get a more sustainable rally. That's how I would assume it's going to happen. Watch this downtrend line. You break above that, and maybe you get a rally up to the 200 or even a potential backtest. Likely not a backtest. That's low probability. I would probably be just marking out these highs, something like that. They'll probably step in on this gap, I would think. Something like that. I would go with 221.53, but that's only if you break to the upside. The more likely scenario is get rejected, put in that bullish divergence. All right. Moving on. Google. Well, I like Google because I'm long triple Q, so that means I'm long Google. Big day. Looks like we're at some resistance right here. So maybe we get a little brief pullback. I don't know. I kind of feel like it's going to gap up on Monday, and then hit some of those resistance and then pull back. Maybe gap up and sell down. But next level of resistance is right here on Google, 2498. And then you obviously have one up here near the 200, 2665. And that's it. I mean, if you see here on the daily, look at that bullish divergence that it has on the daily. And it's on the PPO too. So that's a divergent low on the daily. So drifting low, made a new lower low in price while momentum was moving higher. Got a rally. And we're starting an uptrend. I mean, a bigger picture, higher lows. There's a higher low. And we have an equal high. You gap up, you got a higher high. You're starting an uptrend. Okay, so that's why I think we might be in a kind of a sustainable bear market rally that's going to last more than like 5 days. Could last weeks to months. Maybe all of summer. I don't know. I like Google to the long side. Bitcoin. I'll get to Bitcoin towards the end, guys. I don't trade Bitcoin. I just think it's like Bitcoin rallies when you've got speculative mania, when money's flowing, and I'm getting calls from people that I never get calls for saying, hey, should I buy Bitcoin? All right. When I start hearing that kind of stuff, it just is like, okay, this is a bubble. So I'm waiting till everyone calls me and says, oh my goodness, should I sell all my stocks? Everything's horrible. It's, where they're in panic mode. And that will likely be the point where we're going to be bottoming out in this bear market. And we'll be looking for good solid long trades. No, I don't have a stock screener video in my course, guys. My strategy doesn't always work great for stock screeners. What I've been thinking about maybe adding that to the course. There is some stock screeners out there that can like find divergences, things like that. But at the end of the day, what I'm looking for is stocks that are trending in one direction for an extended period of time, and I'm looking for the reversal. That's essentially the strategy. So usually there's a hot sector, or usually there's a kind of a bombed out sector, and the bombed out sectors, we're looking for the point of reversal, and the hot sectors, again, I'm looking for the point of reversal to the downside. So energy stocks was obviously the hot sector recently, and we started, I went long oil back in November of 2020 when nobody wanted it. Okay. Now that everybody wanted it, we started looking for shorts, and that's why we start catching those. So that's basically the strategy for finding that stuff, is looking, just looking for that. So like right now, tech is the bombed out sector. We're looking for a rally there. All right. It's money rotation. It's just money rotating from sector to sector. That's how it works. That's how the market works. XBI. All right, XBI is a triple leverage version of LBAU. Okay, so anytime I have leverage on something, I really try to chart the not this one. So this is the triple leveraged one. I try to chart the non-leveraged ETF, and then if you can find a trend or something to track in the non-leveraged ETF, then you could take a position in the leveraged one. Because the leverage is okay, there is decay, but the decay only works against you if you don't catch the trend. So if something's just going sideways, the decay will chop you up. Or obviously if something's going against your position, then the decay works against you. You know, the leverage works against you. But if you catch something trending in favor of you, then the leverage actually works for you, and that there's really no decay. XBI obviously trending up. We had a back test last week. So basically short-term downtrend here on the daily, you know, kind of a buy signal, but we'd had a back test here, and it's just, you know, moving higher since then. That low right there was a divergent low. One condition, yeah, it did have, this was a divergent low, and it put it in, it extended that bullish divergence right there. So that would be a great opportunity to buy right there, because you had bullish divergence hitting support, and obviously you bounced off that. We're coming into some resistance right up here at about, make sure I need to drop this down just a little bit, probably right about there. I don't have a lot of reactions on that. I only have the one, but we'll go with that. 78.85. So maybe if we gap up, maybe it sells down like that and then rallies. Probably going to work our way up to this 200-day and 95.96 as the final target. All right, that's what I would see on that one. But you're going to get a pullback. You're not going to just go straight up. All right, you're probably going to get a pullback and then maybe chop around and get up there over time. So that's all I have on that one. But, you know, hey, the course that I have, you guys, if you're interested, you know, check out the course. It's there's a link in the description below pretty much on all of my videos, and if you're interested, that course is put together. It's about 5 or 6 videos, video trainings, teaching you guys, breaking down all the concepts of this trading strategy, risk reward management. You know, finding trades that have a good risk reward ratio is really key to being successful. Position sizing, or, you know, money management. That's like half the battle, half the time. And then charting and technical analysis, how to set up charts, how to and then a kind of a checklist of what to look for a trade setup, and then when to enter a trade, when to exit a trade, essentially. So that's what the course is about. You know, I have a lot of positive feedback. I really haven't had very many people tell me that that the course is not you know, well worth the value. It's not free. Again, I don't give my time away for free, and so I didn't price it for free, but I priced it so that it's affordable for you guys. All right, I'm not trying to gouge anyone. I'm just, you know, we're all working together here. So if you guys are interested, check it out. It's there for your benefit. All right, let me get rid of that one. Moving on, guys. Brad, thanks, man. Appreciate that super chat. I do appreciate that. All right, I am working my way down the list. SPY. Well, I mean, SPY is probably going to rally with the Qs. You know, 20% of the SPY is the FANG stocks, basically. It's tech, maybe even a little bit more. It might even be heavy, you know, a little bit more than that. But it's the largest sector. So pretty much where tech goes, the SPY is going to go. Let's just put it this way. SPY is not going to go down if tech is rallying. It might not go up. Maybe it kind of grinds sideways, but it's not going to go down if tech is rallying. So SPY has, you know, kind of the key things on this chart that I see. Let's see here. Divergent low on the PPO. Sorry, guys, trying to show you on this chart, but all the stuff gets in the way. Not quite bullish divergence here on the PPO. You obviously have a big bullish divergence down here from way back here. Nothing really recently with this thing. It's close enough, we could call it, because let me zoom in. I'll show you guys kind of what it looks like. See, it's like right there. It's just slightly not there. So, I don't know. Again, you had the energy sector in here. It was selling off, but tech is rallying, and we did this little gap fill here, but you got this other gap. So again, I'm looking for this other gap to fill. Let me go ahead and get rid of some of these lines right there. Okay, so I think we fill that gap next week and probably get a pullback at that point. All right, fill the gap, sell down. Where to? I don't know. Probably have to look at the hourly and mark out this uptrend line here. So it's a potential uptrend line as of right now. So here's what I think. All right, fill the gap, sell down, hit the trend, establish the trend, and continue higher. All right, up to where do we go? Well, you have this downtrend line to watch. Go to this daily chart. Potential downtrend line, so we could rally up to there. Something like that. Work our way up there. And then fail. That would be perfect because it continues the downtrend. All right, you're making lower highs and lower lows. And you get rejected maybe at the 200-day. And yeah, but it's going to take time. So in the short term, probably fill the gap and get a pullback. All right, BG. All right, BG, guys. If you guys are new and you haven't subscribed, hit the subscribe button. There's nothing to lose. You know, I'm throwing out trade ideas on a weekly basis, really on a daily basis. You know, if nothing says you have to take the trade idea, but again, there's a lot of the trade ideas that I point out that have worked. This is my kind of market. This is why, since the bear market started in January, we've been really successful on this channel. At least I have. The trade ideas are just lining up. We're just knocking them down because we're in a bear market, and a bear market favors a trader. A bull market, especially when the Fed's involved, you can just dump money, buy anything, and everyone thinks they're a genius because their stocks went up. In a bear market, it's a lot more difficult. I know a lot of people that have, they're just long-term buy and hold people, and they're just losing money, and they're like, oh, the stock market's horrible. And I just tell them, hey, it's a lot harder when the Fed's not pumping a bunch of money in there, isn't it? You actually have to have some skill set to make money. So that's what I teach in my course, is the skill set that's involved for making money in a market like this. So yeah. BG, is this software? Oh, okay. Ag commodities. Well, all right. So one thing about BG, and I'll come right back to it, but DBA is an ag index, and we got that sell signal back here, really right there, June 21st. You got a sell signal on the broad index. This has been in a strong bull market, and it's still in a bull market. In fact, if I go to the weekly chart, it's started a bull market. This was your low, and this goes all the way back to 2007. So brand new bull market, fresh new bull market, just getting started. But this is your first leg, and I think you're going to have now the correction within that first leg. So we could head all the way down to 1757. I don't see us getting too much lower than that, to be honest, but that we could head down there, and it's going to take maybe a year and a half or so, a year to do that. It's going to work its way lower over time, and that's going to shake people out of the trade. The hot money, the people that didn't want to, the people that were like, oh, I'm going to buy agricultural commodities and commodities way up here. Well, they're late to the party, so now they get shaken out, and we look to buy this thing down here. All right. For the next leg higher in a new bull market. So That's what I see on that one. And then going back to that one is BG. So yeah, it, you know, again, breaking down, looking at the daily chart here. I mean, it's going to be very similar in terms of the DBA. All right, sell signal came on June 10th. That's basically a sell signal. My trend line's slightly off. You'd probably want to just adjust it to like that. But June 10th, gap down, gap and crap is what they call that, where it gaps down and sells off. That's a sell signal. And that came with negative divergence. Most likely it did. Let's look. I mean, this thing had been building negative divergence for quite a while. So it was, you know, an extended divergence. So yeah, there's your sell signal. Now it's pretty much plunged pretty good. Maybe we get a bounce here somewhat soon. We got some. There's a level to watch. Broke through that. So the next level is down here. Yep, right there. Close enough. You know, on Friday, you were right there at 85.74, and they stepped in a little early and bought it. So you're probably going to bounce here up to the 200 day is what I would assume. And then probably get rejected there and head lower. Down to this level. Somewhere right in there at about 74, 71. And that's it for right now. Okay. JPMorgan. All right. JPMorgan. Let's look. All right. Bullish divergence. Recognize that. All right. You got a divergent low. So bullish divergence. You're probably going to rally. The level that I would be watching, I guess I've got, yeah, that's to me seems like kind of a key level. So I would want to probably wait for a recovery of 119. All right, you recover that, you know, can hold. You're probably going to rally up to, we'll just mark that out. Little potential downtrend line. It's not that clean though, to be honest. Probably going to rally. Well, just look at this is a level here. All right. 133.18. You get above that, you're going to hit the 200 most likely. And that's, I don't know, that's probably it. All right, moving on. Netflix. All right, so I did point out Netflix on Friday. We don't have the buy signal yet. It's close. I'm looking for it. I'll be on this one if we get it. This is a tech stock. It's been bombed out pretty good. So I think the rally could be decent. But I need that breakout above this trend line. We get the breakout. That would be our buy signal. We should run to gap entry at 245.50 or so. Again, don't wait for the last penny. If you're in a trade and you've got a key level, exit the position before you get to the level. All right. I usually wait, maybe 0.5% or so, before you hit that level. You want to front run the front runners, all right? But again, you probably get gap entry or gap entry, and then you probably get a reaction and then bounce somewhere, maybe down here at 204.79. And then gap fill, and that would be the final target, would be gap fill up there at 329. Okay, so that's it for Netflix. No buy signal yet, but maybe we get it next week. LLY. So LLY, you're going to want to look at XLV, which is your healthcare. Now, I don't know. I wouldn't short LLY. Here's the reason why. If you look at the weekly chart on XLV, this is a bull trend in XLV starting from 2009 on your weekly chart. So I've got these tags of support circled all through here. X this out. This is COVID. It was just a quick liquidity event that was recovered, and so it's an outlier. All right, you throw that data point out, and you still have an established trend. We recently broke the trend on a big weekly sell signal, but look at that weekly recovery, false breakdown, bear trap. All right, weekly breakdown and sell signal, but boom, huge. I mean, that's a big weekly candle. Big recovery. What was the percentage on that one from high to low? 7% in a week. That's pretty strong buying in XLV. Recovery of trend, bear trap. So we're probably going to hit the 200 and then maybe chop around and reject breakdown in the future. The next weekly breakdown that you get in this is likely the real deal, starting the bear trend in this thing, but this is not. All right. So I wouldn't short XL. I would not short LLY, to be honest, only because of that. We can look at it, but see, LLY just made an all-time new high on the weekly. So why would I short that? It's probably a divergent high. Yeah, it is. It's a divergent high for sure. But we don't just short divergent highs, just like we don't buy divergent lows. I don't short bearish divergence and I don't buy bullish divergence. That's only one key part of the setup. All right, take the course if you haven't done so. I'll give you guys the multiple parts of the setup to give you the trade. All right, and I also have a checklist in there that really checks everything off to say, okay, is this there? All right, put the high probability trades in your favor. That's the best we can do. There's no guarantees, but the best we can do is play it like a casino and put the math in our favor. All right, and you do that over time, you'll find that you'll find that it works. It works until it doesn't, till the algos catch on to it and switch it up and start trying to trick everybody. But all right, so moving on. All right. ARC, yeah. Sorry if I'm skipping you. I'm just, I'm trying to find the interesting ones that, and I'm, trying to get to everybody's, but I did go through Google. Uranium sector. We can look at the uranium sector. I know that's that's a hot YouTube topic, is uranium. Support is right there. So you're probably going to hit that support. There's your bull trend. Started back in 2020. Broke trend. Sell signal back on May 5th. Rallied up to the 200. Failed. Basically rejected. Heading lower. Okay. So that's what I see. Support's down here. And that's where I'd be more interested in being a buyer. About 454 on this UUU one. Yeah. That's where I'd want to be a buyer. I suspect... you have bullish divergence. It could rally here. It's just hard to say. I wouldn't be with DBA and the commodities kind of breaking. I think there's more downside here. So the rally should fail, and I'd be more interested. I'd rather buy it down here. That's what I'd be looking for. And then you got another level to watch potentially down here at 371. Those are the two areas I'd be more interested in being a buyer. And that's all I see for now. All right. Futu. I don't know what that one is. This is so tech just popped above the 200. So again, it's been in a pretty strong, can't make a super clean trend line. I'll have to go with that one. Not my favorite, but obviously you've gotten a pretty strong rally already. You're above the 200. This is a negative divergence. Okay. So this, it's not confirmed, but you have negative divergence in the RSI. And, oh, sorry about that. In the PPO, you don't have it. So mixed signals there. I just watch this uptrend line. You break that, it's probably heading lower. But there's a trend to potentially watch there. All right, that's it. Break the trend line there, and that's probably your sell signal. Otherwise, continue to move higher. A little bit of resistance right there at 65. And right there at 81.30. All right. Not a trade I'd be getting into. You know, again, we try to enter the trades right at the key area, and this would be the buy area there. So nothing that I'm interested in. Disney. Okay, so we have bullish divergence. Here's the PPO. Wait. There. So bullish divergence, that's good, and it's there on the RSI. Okay. We have a downtrend line to watch. Let me get rid of this one. That's it. Watch the downtrend line. No buy signal yet. You break the downtrend line, you're likely heading up to, right there, I would say. You might get a reaction somewhere right there, just an initial reaction. But I like this target, 129-ish. Big resistance there. You can see you got a potential downtrend line. You've got this resistance level. That would be my target. And the 200, probably going to come in. That would be it. So my target would be there. You get the buy signal, and that's a, what, 25% rally. Nice solid bear market rally in kind of a defensive stock. You know, yeah. No buy signal yet, though. You know what? I'm going to throw this one on my long list. Sorry, guys. I'm looking for my watch list. There it is. Okay. As a potential. All right. Let's see. How long have I been going for? I'm going to go for 10 more minutes. So, you know, if I haven't gotten to you, I'm sorry. I do try to get to everyone. But yeah. Procter Gamble. So it just started a bear trend. There's your bull trend, your breakdown, big sell signal. I actually had one right there, but again, sometimes the first breakdown is a bear trap. That's the risk reward thing, and that's why it's important to get into a position at a key level. Big bear trap or big bear breakdown there. So this is the real deal, at least as far as I can tell. Pretty strong rally already. Shouldn't really get above the 200. That should reject. I suspect you start getting any bit closer to there, you're likely going to get rejected. So not much more upside on that one from my perspective. The risk reward is not favorable, not very favorable to the long side. You got another, what? The 200's 4% up, and then likely going to make the next leg lower in a bear market that started. So ratchet up your stops if you're long is what I would do. And then you got this, not really a clean downtrend yet, but maybe something like that. Go to the hourly and just chart it, mock it out. Let's see here. I don't know. Something like that. Could be at key resistance. It's just, there's not much more upside in that one, I don't see. All right. No divergence on the daily yet, but if you go to the hourly, I suspect it's, yeah, just starting to build. We might run up to the 200. It's not an immediate sell, but I would just say ratchet up stops. That would be how I trade that one. I did not go over gold sector. Cold, I'm out of that one, guys. I don't know if I told you guys, but I did go long on that one. But when I was shorting the oil, I sprinkled a little on natural gas just because it's you can catch a move. But I'm out of it. No longer in it. It could go higher for sure, but I'm kind of done with the oil shorts for now. I think they're probably due for a bounce. And I would be done with this one. So yeah, I that's it. Nothing going on there. ARK Invest. All right, so here's what I think on ARK. Probably going to rally up to this trend line, which is another 10% or so. I think we rally up there. Could break it for sure and run up and hit the 200. That would make sense to me. The downside on this one, well, let's just watch triple Qs. If triple Qs continues to rally like I think it's going to, this should rally too. So I would look for, just watch that. There's a level. So here's a new level right about there, we'll call it. So you got resistance right there. So you're probably going to run up, hit that, reject, maybe do that. I don't know if we'll break this trend line, okay? That's the part that I just don't know. So I think it's pretty high probability we're going to hit the trend line, but I don't know if we'll break it. If we do, then we likely will do something like that and hit the 200 and then fail. And that'll be it. And then on the downside, I think we're still heading all the way down here, which is this this support down here, so down to 28 or so. And that's probably going to be the end of maybe the end of the bear market, the bottom, or maybe the bottom of the first leg lower. I don't know. It should be good support. So gold looks good to me, guys. I pointed it out on Friday. The gold miners just hit support. They bounced off that. I like gold long. So it looks like they've all been kind of chopping sideways in an accumulation area, building support, and we're about to rally. That's what I think. I'm long gold miners. It's the best I can do is, tell you guys it looks good to me. The charts look set up for a long trade. Yeah, Ulta. All right, well, let's take a look. Someone says it's going to rip up strong. Well, I mean, it's at support, so, yeah. I mean, it's in a bull trend, hasn't broken, so could make a new high. I'm not that interested in it. But the thing is, I don't buy momentum, so if something's in a bull trend, I don't just, let's buy this, and be a late to the party trader. No, what I like to do is look for an extended uptrend, look for it about to reverse, or an extended downtrend and look for it about to reverse. I like to be the early money, essentially. Hive. This is Bitcoin. All right, so we'll do some Bitcoin analysis real quick, guys. Cultivation, thanks, man. Appreciate it. Bullish divergence on the daily, there on the RSI, it's there on the PPO as well. Um, Nope, can't make a trend there. So that's a trend, all right. So I would say good probability we're going to rally up to that trend line. From where we're at now, that looks like another, I don't know when it gets there, but 20, 25%-ish. I'd say there's good probability we're going to do that. And that's as far as I'd let it go for now. I'd get out of any long trade there. You break the trend, then we could go a lot higher. There's kind of a thin zone right here, and I could see us, if you break the trend, I would say we go to there, which would be 786, and that's as far as I'd let it go. The 200's heading lower, so you'll probably run into the 200, and so maybe like this: reject, break, reject, sell zone, or exit the long trade there. Probably short it up there. That's what I got on Hive. Greg Manarino sold all his stocks and crypto at the bottom while mocking the bears all the way down. Definitely short-term bottom. Did he? I don't know. I don't follow him. I watched him a while ago, but he just kind of talks fundamental stuff and kind of has the same message over and over, like the Fed is going to do this and that. It's not actionable. It's just kind of entertainment more. It's just talking. It's like he just tries to rally people around thoughts, but there's no actionable stuff there. So I just gave up on that. I try not to waste my time on YouTube stuff that doesn't benefit my life, and just to hear someone rant about how the Fed's doing this or how they're going to do that over and over. It's not actionable. I don't make money, and I don't have a better life because of it. So that's why I don't follow him anymore. Yeah, well, cool. Al-Azira, buy the program. I mean, obviously it benefits me, so I have a vested interest. But at the same time, I feel like, if one of my buddies wanted me to teach him how to trade stocks, I would teach him the exact same stuff that I teach in the course. Maybe I'd go into a little more detail, if I was sitting side by side with someone, but that's the concepts that they work for me. The trades that I point out, it's all in there. So if you haven't taken the course, I think you're missing out on a real opportunity. It's $150, but I mean, you catch some good trades, it'll pay for itself. So I don't know what else to say about it, but if I had the opportunity to take it from someone, I would pay that money, gladly pay that money, because otherwise you're going to spend years watching some traders or watching Greg Manarino, and I don't know. Costco. Okay. Now Costco. All right, let's look at Costco. Maybe there's a long here. Oh, well, obviously, it's already started. No bullish divergence on the daily, but I'm sure it's there on the hourly. Not really, actually. Interesting. So no bullish divergence. I think Costco is going to get rejected at the 200 for sure. So this is kind of similar to Procter and Gamble. There's not a whole lot more upside here. There is, from where we're at now, 5-ish%. Maybe they'll probably pop it above the 200. So they'll probably go like this. Chop here for a second, pop it above. It'll be like everybody will look. It'll look bullish. Oh, we're above the 200, and then it'll fail. So the way I would trade it is if you're long, I'd probably start to trail stops. Okay. And then if you get to the 200, for me, that's close enough. I'd probably start taking short positions up there. But if they pop it, you could wait for a failure of the 200 and then add to the short position for a move down to here, 388, 390. And then ultimately I have to go to the weekly to show you there's your bull trend in Costco starting back in 2009. All right, there's support, and that's where we're very likely heading. Okay. Maybe that meets up here. Maybe it takes some time to get down there. We meet up at that level here at 389. I don't know. But that's where I think we're heading. So, yeah, there's your trading plan. That's how I trade it. The other thing, because the thing is if I go back to the daily, there was no bullish divergence at this low, so we're rallying up in price, rallying up in momentum. That tells me that this is just a counter trend bounce that will fail and will continue to go lower. The other thing is I can see the potential now for us to run up, pop into the 200 like I pointed out, and it will have bearish divergence. So it'll look something like this, where you are making a higher high in price, but bearish divergence. Okay, there's your trading plan there. I did cover Netflix already. No, guys, the course, once you buy it, you just have access to it. You can watch it over and over. Maybe I'll add to it. I haven't added anything to it. I haven't really needed to because the content that's in there is very valid and relevant. So it's the stuff you need. It's the stuff I would teach, but maybe I'll add to it when I have some extra time. Just, I don't know. I got to think of something else to add to it. I want to just add stuff for the sake of adding to it, but there's probably some other concepts or things I can point out. No commitments though on that. But yeah, the course, once you buy it, you have access to it, so you can watch it. I use multiple time frames. It's important. I even get down to the daily, I do look at the 5 minute, the 15 minute. That's more like really refining the day trade stuffs and looking at key entries. I don't usually get into that in my videos because I'm trying to give you guys trend trades or swing trades, and not so much day trades, but all right, couple more. I'm a little bit over an hour, so I'm gonna just go and do 2 more, guys. If you haven't already, I would appreciate it. Drop me a thumbs up, and it does help the channel. I know most of you guys have probably already given me one, but thank you if you haven't. And Airbnb. Nah, there's not a lot of history on that one. I'm going to skip that one. Sorry. Intel. All right. So we're down here at support on Intel, a level that I've had marked out at 38.13 as some support. All right, so this looks bullish to me. See how you broke it? You broke this support, but you started to put in some bullish divergence. Not a lot, though. I'm sure it's there on the hourly. So there it is on the hourly. Bullish divergence on the hourly. Okay. See how price is drifting lower, momentum's moving higher. Looking at the daily, you've recovered that level. So that's a false breakdown, bear trap. Okay. So anybody who took the short on this breakdown, they're covering, or they should at least. All right, so at this point in time, I think we probably rally up to 43.63. And Intel kind of has this downtrend going like that. So I would look for a rally. Maybe you get like that here. Maybe get rejected and hit the trend line. I don't know. I don't exactly know up here, but it seems pretty high probability a rally up to this 43.50-ish area. Yeah, that's huge resistance up there. I wouldn't let it go much beyond that. Look at that resistance right there. All right, that was support all through there. So you start approaching that area, I would probably just pull the plug. But I think we probably rally up there. Okay. Yes, commodities are in a corrective phase. That's my read on it. That's what I'm saying. I think commodities are in a corrective phase. So I think what's going to happen, broader picture, commodities will correct. They're in a bull market, but in a corrective phase. So they will correct. Inflation will come in a little bit. The inflation will come in. The market will rejoice on the inflation coming in. And that will add to this bear market rally that I think we're in. That will help sustain it a little bit longer. And then the Fed will ease off their hawkishness and say, oh, okay, we're only going to do we're only going to do a 25 basis point hike. The rate in which they're hiking will slow because at the end of the day, the Fed can't hike rates that high. They can talk like they're going to, but they can't actually do it. Unless they are willing to put the economy into a depression. I don't know. But, and then gold will rally and we'll just have this rally for a little while. And then for some reason, the inflation will maybe pick back up or will be sustained at a higher level and it will put more pressure on the market and will head lower. I don't know. That's what I think is going to happen. Micron. Okay. All right. This one and one more, and then I got to get going, guys. I really do. All right. So Micron. So I have a level here at support. Looks like we're holding this. What earnings coming on Friday? I don't know about earnings. Like that's just speculative. It's kind of gambling ahead of earnings. But we did hit this support level and we did hold. I don't see any bullish divergence on the daily. Divergent low on the hourly. So that's right. Let me grab the tool. That's a divergent low on the hourly. Okay. So we probably will rally. Let's look at, yeah, there's a downtrend to watch. There's your buy signal, breakout and buy signal on Friday. So I think we go higher. Looks like we're bull flagging. So likely going to run up to the major target for this flag. I don't know. It could be this right there at 61.21. Or if you take it from the bottom of this move, it's gap fill. So I'd say gap fill. I like gap fill a little bit better right there. So in the short term, I think you head up there. If it can do it before earnings, then likely earnings will be negative and this thing might sell off. But in the short term, probably rally up to gap fill, 62.50. Reject there, at least, maybe a pullback and then continue to rally. I don't know exactly, but this move in the short term and then probably reject. I don't know how that plays out ahead of earnings though. So if I was long and you can get the move up there to gap fill before earnings, I'd probably just exit and let earnings play out and then reevaluate. Okay, that's Micron. One more. All right. Pot stocks, huh? Interesting. All right, what's that ETF? What's the pot ETF? I forget. It's something I've traded it in the past. MG, maybe something like that. You guys know what that ETF is? MJ. Is that it? I don't know if that's it. I thought there was a different one. A little bit more broad-based one. I know this is one. Or maybe it is. No, it's not. I I don't know what the ETF is. You guys give me the ETF and I'll do that one, but I don't remember what it is, because there might be a long there on those things. I don't think it's MJ. Maybe it is. Okay, well, I guess this is it. So again, my kind of trade looks like this, you know. So I'd say there's your downtrend line here. And then clearly a bullish falling wedge. Resistance, 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 resistance. That looks like a buy signal to me, guys. Here's the daily chart. Daily bullish divergence. Let me zoom in on this just to make sure. Yep, it's there. And then the PPO. Not there on the PPO. So mixed, a little bit of a mixed signal. Not as great as a breakout that I'd like either. That's the one thing I'm like, it is 3%. It's not as impulsive as I'd like to see, especially for this sector. Keep an eye on it. I don't know. It is a breakout, so I think we got to give it the benefit of the doubt, but it is, it's paying a dividend, huh? It is, does look like a bullish setup to me for a move higher. And this thing could run. You know, when these things go, they explode. They're like a momentum trade, but the momentum might be just starting. So let me look at this one. This is kind of one of the leaders in this thing, Tilray. I don't know. I'll do some analysis on these pot stocks. I got to look at a couple more charts. This one is, you know, is at support. It was recently at support, so it bounced off support so far. You can see support, 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 support. It's in a downtrend. There is, you know, probably some divergence, bullish divergence on the hourly. So maybe it wants to run up, but it's not really breaking the downtrend. So for that ETF to start to break out, but I'd like to see maybe some bullish breakouts on some of these other pot stocks as well before I start recommending that. But I'll kind of narrow it down on these and take a look, see if there's anything going on here, and maybe throw it up in my weekly video if I find anything. Okay, guys, that's all I have. So thanks for joining. Drop me a like on your way out. Check out the course if interested, and I will catch you guys on Monday. All right, take care.